Hey everybody, I hope everyone is doing well and had a good day. Today's video, we're going to review the E-mini S&P 500 5-minute chart for Wednesday, August 19th, 2026. On the daily chart, just a couple quick thoughts. We had the strong bull breakout, a pullback, we started to channel up, found sellers at a new high, and then had a pretty strong reversal down here. In the big picture, this bear reversal is much smaller than the big bull breakout here, but it's strong enough selling this bear micro channel, including the gap down, that the first reversal back up or the first attempt at trend resumption for the bulls would probably fail. So the expectation going into the day is that there's probably sellers above yesterday's high. This bear breakout probably will hesitate, pull back, and get a test of the lows, maybe get a second leg down or an attempt at a second leg down before there's a reversal back up. Yesterday was testing the August 6th low, basically the start of the channel, breakout, pullback, and the market began to channel up, and that was expected to be support, and we can see that on the 5-minute chart. This line I just added to August 6th low is where yesterday spent a lot of time going sideways. Now going into the day, fairly big gap up when the average daily range has been about 40 points. It's about a 30-point gap. So this is about 3/4 the size of an average daily range as of the past maybe 8 or 9 bars on the daily chart. So a fairly big gap up, but expectations based on the higher time frame, I'm expecting sellers above yesterday's high. So we gap up above yesterday's high, we get a bear bar. I'm expecting there to be trapped traders from the bear breakout on the daily chart, selling above the bad stop order buy signal bar that was yesterday. So expect sellers up here. Gap up, reversal and follow through, 1 and 2, strong enough for a second leg down, but the gap up is also strong enough. It's a breakout. The gap, you can view it as a single bull breakout bar, and there's a big distance between yesterday's close and today's open. That's a pretty big, use your imagination, it's a big bull trend bar, and it's trapping a lot of traders to the left. There's breakout points, maybe sellers above here, maybe here. All the traders selling here, in theory, are trapped by the gap up, and that creates support. Reversal and follow through looks like it's strong enough for a second leg down, but the gap up may need a second leg up as well. Bar 3, outside up, it's a good looking signal bar. It's in the direction of the gap, but because of the higher time frame context, because I'm expecting sellers above yesterday's high, I'm less willing to buy bar 3 here, plus bars 1 and 2 look like they need a second leg down. So if anything, maybe I'll buy below bar 3 or look to buy lower near support. But once again, when the expectation is sellers above yesterday's high, I'm less willing to be buying here. And then a big outside down bar on 4, but a possible second leg trap, 1, pullback 2, big bear bar, and testing support. Big bar, big risk. So traders might sell, but if they sell, they're probably selling small and willing to scale in higher. Strong reversal bar on 5. So in the market finding support at this breakout point, the moving average, maybe this breakout point. Strong enough reversal bar on 5 that it'll probably get a second leg up. Now we've had a gap up, 2 legs sideways to down, a lot of overlap. This might be a bull flag. Bull breakout, bull flag, basically a high 2, high 1, high 2, bull flag. But as far as buying above bar 5, it's not ideal. The upside might be limited. It looks like a trading range on the open, so there might be more sellers above bar 5. Trading range bar 6, expect sellers above, and then probably buyers down here. Inside bar, lots of overlap here. Expect sellers above and buyers down here. 9 a breakout bar, but still within the tight trading range. So once again, probably buyers in this area. Think about if you sold the close bar 4 and your entry bar is bar 5. You're disappointed. So when the market gets near your entry price or back to it, you might look to buy back shorts. Then there's the bulls. Maybe they don't buy the high 2, or maybe they do take the high 2, but there's a stop. Their stop is below the bar, and they're willing to scale in lower. So bulls are buying down here. Bears are buying down here. This is the third push down. 1, 2, 3. And then 10, a breakout bar, which is good for the bulls, but once again, we're testing resistance. There's a bear trend line. There's bars to the left. The highs of the bars to the left are resistance, and this is the top of a fairly tight trading range. So buying the close or buying above bar 10 is not ideal, but we did have 3 attempts down after a gap up. The gap up hasn't had a second leg up yet, so bulls will see this as a high 2. Bull breakout, high 1, high 2. It's a double bottom bull flag. Once again, it's near resistance, so traders, rather than buying the close or buying above the bar, maybe they buy a pullback. They buy if the market goes into the buy zone of bar 10, like at the midpoint of bar 10. We pull back and the bulls get a second leg. Now, they're probably, the expectation, at least for me, was that traders would scalp out near the top of the range, but we get a strong breakout bar 14, and that's trapping traders. It's a trading range on the open. Traders are buying low, selling high, but the traders who sell here, if you sell at the high of bar 1, you're selling high in the trading range. We get a strong breakout bar 14. Who's trapped? The bulls who bought for any reason anywhere take profits, and if they sell out of longs, they're trapped out of a winning position. The market went further than they anticipated, and now they're flat, wishing they had stayed long. Then you have bears selling at the top of the trading range to go short, betting that this would remain the top of a trading range, and the market will come back down at least to maybe the middle of the range, and they can exit down here with a profit. But anybody who sold here to go short is now trapped into a losing position. So we have trapped traders on the bull breakout. It's probably going to get a second leg up. Also, it's a fairly tight bull channel, especially since bar 10, minor reversal, small pullback here, and then a pretty strong leg, 12 through 14. 15, a doji bar, unlikely that this is the start of a bear trend below bar 15. It's a weak signal bar. It's a doji, so a trading range bar. And in a trading range, you want to buy low and sell high. So rather than selling below that bar, traders are probably buying below that bar. Anybody who sold here and got trapped is hoping we get back here so that they can avoid a loss if they went short, or get into the market and go long if they got trapped out. Second leg up expected, 15. Expect a minor reversal. Expect buyers below and a second leg up. So we get a minor reversal and a second leg up. 17, 18, a strong bull breakout. But a couple of problems with this rally, 17 and 18 at this point. We've got 3 legs up, 1, 2, 3. And we are approaching resistance. I didn't talk about this on the daily chart, but I want to briefly go back to it. And maybe I'll do this. So there's no gaps. Maybe it's more clear this way. Remember, a gap is a breakout, but on this extended trading hours chart, we're seeing the daily chart without the gaps. Here's the micro channel I'm talking about on the daily chart. And anybody buying at the low of August 17th, or maybe the low of the 13th, the strong bull bar, anybody buying here gets trapped by the bear breakout on the 18th, the gap down. So that creates resistance at these lows, the August 13th low, the August 17th low. So the expectation is a minor reversal and a second leg down. And if we pull back to these levels, there's probably going to be sellers. That's what I have drawn on the 5-minute chart. that's the red horizontal line, and I have it labeled 817 low. So that's the first problem, or maybe that's the second problem. The first problem, that it's 3 legs up. The second problem is it's testing resistance on the higher time frame. The third problem is average daily range is about 40 points, and the day's range at this moment, or at the moment of 18, is 41.5 points. So we've reached an average daily range. And then the fourth problem is the expectation was that there would be sellers above yesterday's high, not buyers. So I was a little bit surprised to see this rally, but I'm still not expecting today to be a strong bull trend day. It'd be unlikely with the momentum down on the daily chart and the bad buy signal bar. Just because the expectation is sellers above yesterday's high does not mean traders will sell aggressively at yesterday's high. Maybe they'll come in above yesterday's high. And that's what's happening today. So we have it's a parabolic wedge. So we know it's a breakout on a higher time frame. The channel up is tight. You don't necessarily want to sell here, but it's just not as ideal to buy here. In general, buying below 19 would be better than selling below 19. And I would not sell below bar 19. But I do think it's riskier to buy below 19 in this context because you have the 3 legs up. So you're expecting at least a pullback, minor reversal. But then you've got the higher time frame resistance. You've got the fact that the market has reached an average daily range size. And you have the fact that on the daily chart, we have a bear breakout. You're expecting sellers above yesterday's high. And right now we are above yesterday's high. So the expectation is sellers here. So like I said, in general, better to buy below 19. 19 is not a very strong stop order sell. It's a weak signal bar and the channel up is tight. So if anything, there's buyers below 19, but then we get bar 20 and that's a strong bear bar. And bulls probably exit below that bar, expecting 20 to get a second leg down, expecting the wedge to correct for a couple of legs, and then maybe we'll test the start of the third leg. I count it this way, 1, 2, 3. So this is the start of the third leg, and it's probably going to be support, but strong enough breakout bar 20, trapping traders buying below 19. So the low of 19 becomes resistance, and the expectation is that 20 will get a second leg down. You can see 21 got close to the 19 low, but did not quite get there. And then the micro channel continues here, 4, 5, 6 bars. 24, bad stop order buy. Sell the close, sell above, expecting the bear micro channel to get a second leg down. We don't trigger a stop order buy until here when 28 went above 27. But just like 24, 27, it's a weak stop order buy. Maybe an 8 or 9 bar bear micro channel. Weak stop order signal bar for buying. Expect sellers above and a test of the lows. Once we pull back, we've entered the channel phase. Spike, pull back. Now we're channeling. Expect buyers below 27. Overall, it's a trading range day. Trading range on the open. Big rally, but then a big reversal. You can call it a major trend reversal. Bull trend, trend line break. Now expecting a test of the highs. Bears hoping it becomes a lower high major trend reversal, but a test of the highs is likely. It would be more unusual if we simply rallied and then sold off and continued to sell off, but anything is possible. Now we find buyers below 27. 30 is a reasonable stop order buy. Why? It's a trading range day. We're testing support. You look back to the left. Breakout points to low of bar 14. This area is support, and we have a second entry buy setup. The first entry above 27, that was weak, expected to fail. 30, a much stronger signal bar, and a second entry. Once again, it's at support. And remember the tight channel up to 18. That's a breakout on a higher time frame. This is simply a pullback, and the bulls will probably get at least an attempt at a second leg up. So 30 is a reasonable stop order buy. and bears probably exit above 30, expecting at least a small rally. Strong entry bar, 31, so strong breakout follow through. It's probably going to go at least a little bit higher and get some kind of second leg up of its own. And then momentum starts to slow down here with 32, 33, much smaller bars. We have expansion, breakout, and then contraction, trading range bars. It's like a breakout, pullback. Maybe the bulls get another breakout, but the upside might be limited. These red lines are expected to be a resistance area. This level from the low of 19 to the August 17th low, expect sellers up here, and the 5-minute chart supports that. You can see what happened last time the market was up here. We sold off for a lot of bars. 34 went outside up. It's testing near resistance, so even though it's a tight channel, and I call it a tight channel technically, it was a micro channel up to 33. When the low of 34 fell below 33, it pulled back, and now we're in the channel phase. So it's a tight channel to 34, but at resistance, and like I said, a possible major trend reversal, bull trend, trend line break, possible lower high, major trend reversal. And then a bear bar closing on its low, breakout bar 35, technically a second entry short because we triggered the sell below 33. It failed. Now we have a second entry short below 35. So a second entry long here, second entry short here. 35 is a reasonable stop order sell. Bulls probably exit below it. We might be high in a trading range. It might be a lower high, major trend reversal. Bears can sell. Looking for the bear breakout to get a second leg down. We're probably going to come back and test these lows. Strong breakout bar, 36, probably going at least a little bit lower, but then there's probably support around the low of bar 30. 37, small reversal bar, unlikely to reverse the bear breakout, probably sellers above, and second leg down, still likely. Still a micro channel up to this point, sellers above any bar. 42, bad stop order signal bar, probably sellers above. The blue line is yesterday's high. You see the market spent a lot of time going sideways here at yesterday's high. It tried to break above it, but ultimately came back to it. We finally pull back 43, breaking above 42, but bear micro channel, probably sellers above, and a second leg down, and then immediately sold off to the new low. But channel phase, now there's probably buyers below 42, and bears will sell pullbacks and take profits at new lows. And that's what ends up happening here for a few legs down. Looking back at the bars to the left for support, bar 12 low, maybe acting as support. Maybe there's more buyers below 42. We've had 3 or 4 pushes down to support. Overall, it's probably a trading range day. We have more than half the day here, and we've spent it going sideways. Doesn't look like either side, bulls or bears, are really in control. Another push down in the channel, but late leg, probably support to the left, and bear channel line support. Very tight trading range at this point. When the market's in a tight trading range like this, usually better just to wait, not really worth trading. You know it's a limit order market. You can buy below bars, sell above bars, and scalp, but the range is so tight, it's just not worth it. And the tight trading range continuing here. Finally, a breakout bar, 55. Can you buy 55? Bull breakout above a tight trading range. Well, it's testing resistance. Might be a late leg, 1, 2, or 2. Leg 3, testing resistance. So 55, really not an ideal bar to be buying. It's a big bull breakout bar at the top of a tight trading range. If anything, there might be more sellers up here betting that the breakout above the trading range will fail. And then what about 56? Big bear breakout bar. The signal bar itself, very strong. Bear bar closing on its low. What's the problem? It's the same as 55, but the opposite. the bear channel line, it's at support in a tight trading range. There might be more traders buying down here, betting that the bear breakout will fail. And the market reverses back into the range. So the tight trading range continuing here. Strong pair of bull bars, but testing resistance. Tight trading range continuing here. So limit order market, traders are buying low and selling high. 70, a strong looking breakout bar, not especially big, but a couple legs up to resistance, probably more sellers above. 72, in the middle of the tight range, might be more buyers down here. 73, big breakout bar, but similar to 55. Got 3 legs up here. Maybe it's nested, maybe it's 1, 2, 3 legs up. So different ways to count a late leg. Either way, it's at resistance in a tight trading range. Might be more sellers above and on the close of 73. And then 74, strong enough bear bar. You have a bearish context, big bear breakout. This might be a bear flag, although the trading range has gone on for enough bars. That breakout direction is probably close to 50-50. But strong enough bear bar, we may go at least a little bit lower, but there's probably buyers at the bottom of the range. So 75, not ideal. You have bear momentum, but bear support. Market attempting to break out. Let's look again to the left for more support. The bar 5 low, probably support. So even if we go a little bit lower, overall it's a trading range day. Expect buyers below. Bears have a micro channel, probably sellers above these weak stop order buys. And 78 went outside up. But it's the first reversal attempt after the bear micro channel. Big picture, bears have 3 big legs down, 1, 2, or 2, 3 to the bottom of an overall trading range. So 78, really not an ideal bar to be selling. Anybody selling above 77, selling above 77 is better. It's a weaker signal bar, but 78, outside up bar closing on its high, not great for selling above since it's a late leg near support. 78 will probably get a second leg up, but because of the micro channel, the market may pull back first, and buyers may not come in until later, like in the buy zone of the bar or below the bar. In other words, bulls might not buy the close or buy above 78 because of the momentum down here. The market begins to pull back, but probably buyers in this area or below 78, but ran out of time in the day for that one. Okay, for stop order trades today. Buying above bar 5 might be okay. Bull breakout, high 1, high 2, but have to be willing to scale in lower because you might be buying near resistance. Buying above bar 12 was probably okay. It's a breakout mode situation. In this case, the tight trading range, we had a gap up, high 1, high 2. It's really difficult to buy when the market's at resistance, so it's not ideal. But the bulls have the argument that we have the gap up, we have a resumption attempt, we've had 3 attempts to go down, and a big second resumption attempt, the first one and the second one here, and then the smaller double bottom, so double bottom 5, 9, and then 9 and 12 with a good signal bar. It's probably okay to buy here, just not ideal. Stop order buy the close 14 and scale in the first reversal, likely to fail. Buying the third leg near resistance, not ideal. 20 was a reasonable stop order sell. You could sell below these bars. Micro channel, first reversal likely to fail, so you can sell and scale in, expecting a second leg down. I said 30 was a good, reasonable stop order buy above the bar. 35 was a reasonable stop order sell. 36 is a reasonable sell. Micro channel, expect first reversal to fail and a second leg down. Tight trading range, this is not good for stop order trading. Really back here, the same, it's really not ideal. But at least back here, you had the gap up expecting some kind of second leg. But through here, you have a bear breakout leading into this tight trading range. So if anything, traders might be looking to sell. Maybe this bear trend gets resumption, but we get so many overlapping bars. Eventually, you get 15, 20 bars sideways, and you just expect the trading range to continue and expect breakout direction to be 50-50. So really not great in terms of stop order trading through here. Limit order trades, I thought selling above 2 was reasonable, expecting a second leg down, maybe buying below 3, but scaling in lower, like at breakout points. Buying below 15 was reasonable. I would skip the buy below 19 for the reasons I talked about earlier. You could sell at the breakout point, although I don't think we quite got there, on 21. Sell above 27. Buy below 33 is reasonable. You have the micro channel, it's a bad stop order sell, but that's a quick scalp here at the top of a trading range. So not ideal. Limit order trade, sell above 42. Sell above 47. Tight bear channel, bad stop order signal bar. And then became a limit order market somewhere in here, maybe after 5-6 bars going sideways. You just try to find where the range is and then look to buy low and sell high. So you're selling above bars like 44, maybe you get short on 55. You buy below 47, you get long on 56. And the tight trading range continued here. Once again, not a stop order market, limit order market. Sellers at resistance and buyers at support. But in this case, when we fell below support, we fell far enough that the market broke below support. Anybody buying here gets trapped. That creates resistance. Bears get a small second leg, and I'm out of time. All right, that's going to be it for today's end of day review. For more price action fundamentals and how to trade price action, I would recommend visiting the brookstradingcourse.com, studying the Brooks Trading Course. You can find a link in the description of the video. All right, thanks everybody for watching, and I hope everybody has a good night.